Hello, income harvesters. Welcome back to the channel. Cryptocurrencies and making income out of cryptocurrencies using covered calls. So, this is something which has been made possible some months ago, especially in the American market, with the advent of Bitcoin, covered call strategy, exchange traded fund, and Ethereum income funds, and so on. So, today we're going to talk about one of them, which is YETH, which is from the Roundhill Investments. And this fund aims to give you a regular income or a recurring income from the investment in Ethereum. So you invest in this ETF and you can expect to get some recurring or regular income. However, one small disclaimer, this is not a financial advice. And number two, the income that you're going to get is not going to be consistent or it's not predictable. It's going to go up and down. It's going to be highly variable, probably pretty high in some months or pretty low in some months. So there's no guarantees. So just keep that in mind while we go into the video. Okay, before we go ahead, this is not financial advice. This is purely for education and for understanding how the fund works. And it's based on the data and information that I have. And I'm sharing my thoughts and my ideas based on that. And you should do your own research or take your own consultation from your advisor before making any decisions. Okay, with that said, let's quickly look at the strategy and it what it does and what are the different components. Similar to the Bitcoin strategy we saw in one of the previous videos, this fund also aims to generate income. In this case, it's going to be a monthly income. The previous Bitcoin covered call strategy was promising to give you weekly, but this one is giving you monthly income using covered call writing strategy. And the fund also has exposure to the Ethereum exchange traded products or ETFs that have direct exposure to Ethereum. So similar to the previous fund, this fund holds EETH. The other name for that is Proshares Ether ETF, and this is one of the exchange traded funds from Proshares, which invests in the Ethereum, one of the two large cryptocurrencies, and also ETHA, which is the iShares Ethereum Trust ETF. So, so in this case, we have two different ETFs that the fund is holding as the underlying asset or the main asset. So one point to keep in mind is Roundhill actually does not have their own exchange traded fund, which tracks the Bitcoin or the ETF. Instead, they choose to have iShares or ProShares or other exchange traded funds. That is pretty efficient because there are a lot of Bitcoin funds and Ethereum funds which have a pretty low expense ratio and are very effective and very good in terms of the volumes, in terms of the costs, and so on. So they choose to hold the ETFs as the main underlying assets. And on top of that, they're going to write covered calls. And writing covered calls means it's going to generate extra income for the fund. And that's going to generate distributions for the investors. Okay. So that's a simple, typical covered call strategy on Ethereum using the Ethereum ETF as the underlying asset. Okay. Let's look at the basic key information here. The ticker symbol is YETH. You already saw that. And the price is around 23.88 cents. Fund was launched back in September 2024. So we just have about probably 9 months of history, like so far. 9 months, sorry, yeah, 9 months of history. Not even one full year. Probably we'll wait for a few more months to have the 1 year performance review. The net assets is about 26.5 million, pretty smaller in size. Probably it's not that popular compared to the Bitcoin, which is understandable because this is also a second emerging cryptocurrency asset. And expense ratio is 0.96. And all this information is from the Roundhill Investments website. Okay. Now comes the very interesting part, the price returns. Before I go into the YETH's actual performance, I'm going to give you a just comparison because I'm comparing YETH with its underlying assets, which are ETHA and EETH. So just to give you an idea, ETHA and EETH are the underlying assets within the YETH. So the reason why I'm comparing the underlying assets is to see how those assets are performing. So if you look at the top here, like the top portion, which has the three comparable ETFs, and I have chosen 1 year as the period of comparison. Although this fund doesn't have 1 year history, you can see the pink line starts somewhere in September 2024. So it doesn't have a full 1 year history, whereas the other funds have a longer history. Okay, so if you look at ETHA, probably that started in August. They have minus 30.37%. EETH, which is the oldest fund, has about 40% negative. So both the underlying assets are not performing well. Plus, you also have the YETH, which is giving you negative returns of 51 or about 52% negative returns. Highly disappointing. It's underperforming both its underlying assets. And it seems that in the initial periods, the ETH was outperforming the other funds, especially when they were down. But as you see, when time moves on into 2025, as you get into the later part of 2025, probably mid 2025, you can see that the orange line, ETHA and ETH, the blue line, the underlying assets are performing okay or recovered. But whereas if you see the pink line, the YETH is pretty flat, probably a little bit up, a little bit down. It's not really performing well compared to the underlying assets. So, I mean, according to the second point that I'm trying to emphasize here, YETH seems to outpace the underlying ETFs on the upside, like in the initial stages here. Probably here it's trying to outperform, and also in this period. I'm not sure if it's outperforming only on the upside or the downside. It's pretty difficult to read right now. But if you see the recent periods, it has flattened out. Like it's kind of flattened out, and it's not going up too much. It's coming down a little bit, then flattening out, coming up a little bit, and so on and so forth. Trend is not clear. If any of you have any insights about this, or you know why this is happening, you have some, insight into that, please drop in the comments below. I like to hear that, and I'm happy to learn from you. Or if you have any other points that you want to share, please feel free. So that will be beneficial for all of us. So with that, let's move to the next part, which is the continuation of the price returns. So I'm just looking at the price returns for YETH since September 2024. Since the past 9 months, you can see YETH delivering minus 51% returns roughly. And ETH, Ethereum, the benchmark, the Ethereum asset itself is giving minus 37%. So again, this is again disappointing because when the when the Ethereum is negative or not moving up, moving down instead, the covered call ETF is supposed to give you a little bit of cushion in terms of the price, but covered call ETF is actually going down at a faster pace. Probably in terms of total returns, it may be better off, but I don't know. We will look at it next. When we look at the total returns, you will see that YETH is giving you positive returns. I don't know the number now, but that way it will be protective. That's one point I want to emphasize. This slide is only showing you one side of the story. You have to look at the other side. Good or bad, too early to say because we have a limited history to and lack of data. So these are the limitations in this fund. And since it is a new fund and launched in September 2024, it's pretty new compared to YBTC. So whatever happens, like good or bad performance, like it's better to wait and watch. And once you see that stability and once you see a kind of a point where you feel it's attractive, it's a very good point to get in. I mean, I'm not saying you should not buy this or it's not a good fund or anything like that. It's just that the history is limited. If you have more experience or you have someone guiding you or advising you on this, you have done your research, probably it's a different story. You can look at it. But if you've not done your research, if you're still new to this, if you're still thinking what you have to do, probably you can look at YBTC initially because Bitcoin is the main blue chip asset in the cryptocurrency world. So look at that. And then later we can look at YETH once you're comfortable. Okay, let's look at the interesting part, dividend. And seeing this, you might get pretty impressed. First of all, let me first do the disclaimer. I'm not a crypto expert and this is not financial advice. Definitely take this with a big grain of salt because whatever you're seeing here is a very short term snapshot performance. In the near future, it's going to be completely different. In the future years or months, it's going to be completely different from what you're seeing here. This is just 9 months data. 9 months dividend comes up to around 17.98, $18 roughly. And average dividend per month works out to 1.99. And estimated 12 months dividend. Like this is just my calculation. This is not a guarantee, or this is not the exact numbers because we have only 9 months data. I just made it into a 12-month annualized number. Comes close to $24. And when I calculate the dividend yield, it's almost like 100%. It's almost equal to the stock price, like the fund price. Fund price is around 23, $24, and you are getting that amount of money in dividends within the year, like within around 9 months, within the year, sorry, within 12 months. So, is this sustainable? I don't know. I don't think so. High yields like this may not be sustainable. Probably we may see negative returns next year. We could see lower returns next year. Then you can again see another big hike in the dividends. We never know distributions. So I have used the word dividends in my slide, but this refers to distributions. Basically, the difference is in this case we are writing covered calls, and the income is made from premium earned from the covered calls, and the income made from the covered calls is distributed to investors, just like a stock distributes profits to its investors in the form of dividends. The same concept. And the second point I want to emphasize is this is annualized number, like because as the months go further down, we may see a slightly lower number, higher number. We never know, and it's extremely high, not sustainable. And however, one point to remember: these funds are capable of giving 20% plus returns, which are achievable, but always variable and unpredictable. Keep that in mind. Like the 20% returns or 20% plus returns are achievable, definitely. It's definitely possible. It's definitely achievable. It's not some kind of a scam or anything. It's possible. However, one thing to keep in mind, it's going to be very variable, very unpredictable. So, for example, if you're someone looking for income, like suppose you are a retired individual or you're someone needing that income for your expenses, or you want to rely on that income for your expenses or your budget or your monthly living costs, I'm sorry, this is not the fund for you. The problem is it's very risky, and imagine in 1 month if you're going to get no dividends or very small amount of dividends, next month you're going to get a little higher, and then it starts coming down. It's going to be very difficult for you to budget for the future. And the other issue is you need to have more savings to invest back into the fund to buy it at a lower price and get a higher yield. So if you're someone who is looking for this as the main source of cash flow, it's not going to work out. Like this could be a very, very small portion of your portfolio. Okay, another thing is the higher yield is also accompanied by a negative price or a price erosion. So because the cryptocurrency is still evolving kind of asset, this is going to cause a lot of problems because you will see the higher amount of dividends coming into your account, but at the same time the value of your principal is going to go down, which is a double-edged sword. Like, however, the net returns could be better. Total returns could be better off. You'll still be in the positive, but still there's no guarantees. Like we never know in future total returns could go negative. Anything can happen. But as of now, it appears that there will be a price erosion and there will be higher dividends, and overall you might end up making a positive return. That's how this works. I'll show you that in the next slide. It's coming up in the next one. So total returns are difficult to determine because astronomical returns on dividend and negative returns on price, there's a trade-off between the two. That's what I explained. And it's a newer asset class, very less history compared to Bitcoin. And major chunk of the returns comes from distributions. And the yield is supernormal. It's not going to be sustainable. In the future, it's going to probably gradually reduce and come to a more realistic average number. Right? There will be a kind of reversion to mean, and there is a risk of making incorrect analysis or reading here. So some of the numbers are misleading. So I'm not going to talk about the total returns because of that reason. Because if I give you a number based on back of the envelope calculation, it's going to completely mislead you. And for me, as a kind of ETF advisor, or as kind of, I'm not a financial advisor, but as an ETF research analyst, without enough amount of data, if I'm going to tell you something and drawing conclusions, it's going to give you a wrong impression, and it's not going to help you make the right decisions. At the same time, I don't want to risk myself into giving you incorrect picture about the fund. So right now, I would say just wait and watch. let the fund complete 1 year of its journey. And at that point, you're going to get a clear picture, like 1 year, what is the total returns? What is the distribution yield? What is the price return? And what's the total return? And it's going to be crystal clear at that point. Till then, I would say just wait and watch. Okay, if you're more interested in this type of funds, I would recommend watching one of my previous video, which is on ETHY, ETH, which is the Purpose Ethereum Yield ETF. Uh, you should watch this video to get a more holistic and a better perspective, because ETHY has a track record of more than 3 years, and they have been paying pretty high yields. Yes, it has gone through a lot of roller coaster ride, and price returns are negative. And the same issues that you see in this fund, I have faced it myself in this ETH. ETH is actually listed in the Canadian markets. There's also US or American versions available. Uh, so you can check it out with your broker or platform whether this is available. And if not, you can definitely look at other US options you have available. But to get an idea of how this fund performs, you can look at its history and you look at my video too. This is definitely a must watch. Make sure you go to this page in my channel. My channel is at the rate harvesting income on YouTube, and in that you can find the video. I can also provide links in the when the video is posted. But feel free to browse through my channel. You have a lot of interesting videos of funds which have done well in the past. So definitely check it out. Okay, pros and cons. First, I'll go through the pros. Which are pretty interesting. Okay, there's a typo here. This is not Bitcoin. This is Ethereum. You are getting Ethereum exposure plus high income. So that's the advantage of this, you know, fund. And you are getting relief from self-custody of the Ethereum or the cryptocurrencies, because you are doing it through the ETF. The exchange traded fund manages that. And there is a diversification into alternate asset classes. The fund is exchange listed on the CBOE. So these are the pros that you have. It is similar to the pros of Bitcoin ETF that we saw in the earlier video. Of course, there are a lot of drawbacks, a lot of limitations. Since it's a new fund, you will have some of these limitations which are posing a great constraint on you. So that's why I was saying that don't look at it right now to invest immediately. Just wait for some more time. You will see some clarity, and you'll see the performance that it reaches a point of 12 months or 1 year. So right now the expense ratio is pretty high, 0.96. I think that's still justified because there's a lot of active covered call writing they do. So these funds are definitely going to be expensive. There are some funds which charge more than 1% in expense ratio. And the other problem with the call writing is you have a cap on the upside, limited upside potential, because once the fund writes calls at a certain level, the returns are capped at that level. And how much of the portfolio is capped, that determines your returns, because once that part of the portfolio is capped, the other part of the portfolio is open to higher returns. So if the underlying asset performs really well, your returns are capped to the extent of call writing done. To the extent the calls are not returned, like the fund just holds those underlying assets, those assets are going to appreciate dramatically along with the benchmark. So in that case, if the prices go favorably for the benchmark, you're going to benefit more from the uncovered part of the portfolio. But if the fund performs flat or down, you're going to benefit more from the covered call writing portion of the portfolio. So that's a simple way it works. Because when the markets are down or flat, the premiums are going to be pretty consistent, and that way the fund is going to maintain a steady performance despite the flat or down markets. That's the nature of covered calls. You already know that. You're watching my channel. So anyway, so the volatility and highly unpredictable nature is something that you need to keep in mind. This is not a consistent, steady income. No guarantees here. It's always going to vary. And it's a new asset class with limited history. And even compared to Bitcoin, this is still something pretty new and still needs to get established. Even the Bitcoin ETFs are just getting into the, um, you know, a mature stage. I would say it's still in a growth stage. I'm talking about the Bitcoin covered call exchange traded funds, not the Bitcoin ETFs. The plain vanilla Bitcoin ETFs are now kind of mature enough. But when you look at the covered call Bitcoin funds, they're still kind of maturing. And in the Ethereum, it's still about to reach the maturity stage, still in a growth stage. Like a lot of funds which are coming up, you have plenty of options. There's no need to rush or hurry. You, if you want to still take exposure, you can only do about 5%, 10%. Right? That's the advisable limit. And because of the high variability of yields, you need to be pretty careful about how much you want to invest and whether you want to keep this as the main part of the portfolio or not. And you don't want to have a big chunk of money tied up in these kinds of funds, um, because there is an amount of risk involved here. And again, this is not financial advice. For different individuals, the situations are different. If you have more knowledge, and more experience, your knowledge and experience can mitigate some of those risks. But still, this is a newer asset class, newer funds, newer fund managers, newer strategies. So, you need to give it some more time to stabilize. Okay, just to quickly sum up what I discussed earlier. This is just a quick summary of what I have discussed earlier. YETH is a relatively new fund, 9 months old, and we need to wait for a year to get holistic performance. And secondly, this needs to be a small part of the portfolio, 5 to 10% exposure. That's the second thing to keep in mind. And who can consider YETH? Designed for who? Basically, it's for regular income seekers and people who want to benefit from Ethereum price appreciation with a capped upside. That's the drawback. And you're okay to benefit from higher risk and volatility because you are choosing to invest in covered call ETF. So basically, higher volatility and higher uncertainty will bring in more premiums. So that's the thing. And you should actually have positive feel about Ethereum, but you have a fear whether you want to invest or not. So you're still positive, then this fund works for you. Okay. So that's the sum up for the Ethereum ETF YETH. It's a great option in the future. Right now, I would say wait and watch till you get the clear picture in 1 year. But it's a wonderful fund. It's able to provide good returns. But we'll have to see the 1 year numbers to know how it exactly going to pan out and how it's going to be suitable for you. So I hope you like this video, and if you liked what you're watching, please share your comments, subscribe to the channel, and feel free to share with your friends or family who might be interested in this. Thank you. Have a great day. So these are the you know uh, aspects which I want to emphasize, that this fund is actually meant for people looking at. Let me go to the previous slide.